3, 2, 1.
You're listening to Rocket Your Dollar, where the finance gurus who created Rocket Dollar explain all things self-directed investing and how to achieve financial independence. To learn more about how to open a self-directed IRA, visit rocketdollar.com. Now let's get started with the show.
Welcome, everyone, to Rocket Your Dollar, the podcast from your friends at Rocket Dollar. In the show, we discuss the power of self-directed investing. My name is Thomas Young, co-founder of Rocket Dollar, and let's jump in. Thank you for joining us, and like always, thank you to Capital Factory and the Austinpreneur podcast for sharing the recording space with us. Today, we're going to talk about the Solo 401k, and we're going to go through a comprehensive guide about what it is, who qualifies for it, how you can use it, and the flexibility available to you with the Rocket Dollar flagship product. So, a little bit of the background of the Solo 401k. Before Rocket Dollar came about, and before there was this sort of fintech resurgence in retirement products, Solo 401k was an investment vehicle that was complicated to open and expensive. And usually what you would do is you'd go to an attorney, an ERISA attorney that specialized in opening these sort of accounts, and they would go through the process of creating the trust, which a 401k is always a trust, and you would complete about a binder full of paperwork, and you would then be turned away. You would be able to manage it on your own, which is a good thing or a bad thing. For most people, it's a bad thing because it's tedious, cumbersome, and if you ever get audited by the IRS, you'd then have to produce every record of every transaction under the trust. You'd have to go to a bank and open up your own bank account for a trust, which is not always easy to do because most bankers don't know how to open trust accounts, which is unfortunate, but that's the way it is. And because of the prohibitive cost, you really had to have a very high balance in your 401k to justify the expense of opening one of these things up. You know, other places like Vanguard have offered solo 401ks in the past, but like most IRAs or 401ks, they would then let you into their sort of menu of funds that you could invest in. But if you wanted a checkbook control solo 401k, it's always been complicated and expensive. So that speaks a little bit about why more people aren't using the solo 401k to diversify their portfolios. And so it was really because it was expensive. There wasn't a lot of knowledge around it. It was sort of, if you were lucky enough to have an attorney that knew about it, that's how you'd find out about it. But there was no one really out there sort of evangelizing these products and talking about why they were so powerful. They were kind of a well-kept secret. And like we talked about in previous episodes, large financial institutions have their ways of making money, and that's by selling you their funds. So they don't profit when you use your retirement dollars to do real estate or private companies. They have no way of collecting fees, and so they have no real reason to sell you these things. So traditionally, financial advisors weren't necessarily shortchanging their clients on options. It's that because the financial advisors are trained by the big firms, you know, they're doing their job. So if your financial advisor didn't tell you about it, it's likely that they don't know that this exists, and they're trained to recommend certain brokerage accounts and certain products that kind of get you where you need to go, but not where you want to be. So what this all comes down to is that with a self-directed solo 401k through Rocket Dollar, and there's a couple other, providers out there that'll get you where you need to go, but with Rocket Dollar, we've made it easy to open the solo 401k, have the self-direction option, which all of our 401ks come with, and now it's easy to tap into opportunities that your brokerage or your financial advisor won't necessarily tell you about, like real estate or private companies or private equity, things like that. So really, by creating a self-directed solo 401k, you unlock the power of the retirement account to do what you need to do, to get where you want to be, and to take advantage of the opportunities that you want to participate in. So let's talk a little bit about the rules and why there are some qualification criteria for getting a solo 401k versus the IRA that we also offer. So the big qualification question for opening a self-directed solo 401k or any solo 401k, even if you go through a brokerage, and that is self-employed income. If you have a one-person business that's you and your spouse and you make some sort of self-employed income, you qualify. And the reason you can't have employees, which is one of the qualification questions, is because if you as a business owner have employees and you don't offer them a 401k plan, but you have one yourself, the IRS frowns upon that because they want you to extend the same sort of benefit that you're getting as a business owner to your employees, at which point you would go through one of the traditional 401k providers or SEP IRA providers in the marketplace, of which there are many. And if you do have employees and want to set up a 401k plan for your employees and for yourself, give us a call and we'll help you and guide you in the right direction. It's just not what we do. So self-employed income, no employees, you qualify for the solo 401k. And why would you want a solo 401k versus a self-directed IRA? There's a couple reasons. One is that the contribution limits are much higher. So if you make most of your income from your self-employed income or your one-person business, maybe you're a consultant, you can contribute high amounts. And the amounts go up, pretty much every year. But right now we're at the contributions for 2019 are you can defer up to $19,000 of your pre-tax income, double that if you're married and your spouse is a participant in the business. And if you're over 50, you can do an additional catch-up contribution of $6,000 for a total of $25,000 straight deferred. And then there's some profit-sharing piece that allows you to get up to $55,000 in your plan. So that's a huge amount that's kind of taken off of your tax bill versus the $6,500 that you can put in an IRA. And with the solo 401k, there are no income limits the way there are with the IRA. So that's one of the big pieces. The second one is that the solo 401k has a little bit looser laws around prohibited transactions. IRAs tend to be a little bit more stringent around prohibited transactions. For example, in an IRA, if you make a prohibited transaction, there's risk that the entire account can be distributed. And with a solo 401k, if you make a prohibited transaction, the only penalty is on the transaction amount. So say, for example, I make a $1,000 prohibited transaction. I invest maybe with, my wife's father, right, who's a prohibited person. And I invest $1,000 in his company, which would constitute a prohibited transaction. My penalty is on that $1,000, not on the whole account. So then I would be liable for the income taxes on that $1,000 and the 10% penalty. So it would be, maybe a $500 mistake versus the risk of distributing the entire IRA. So just a little bit looser. Doesn't mean that we should take it less seriously, but, if a mistake were to happen, you're not in that much trouble. And then the other piece that people really like about the solo 401k is the ability to take a loan directly from the plan. The IRA does not offer this, but with a solo 401k, if you need access to basically a line of credit, you can lend yourself tax-free, penalty-free, half the value of the plan up to $50,000. So a great example of one of our clients that called me and was telling me about this was his wife wanted a new car. And instead of going out and getting a car loan or going through a bank, he took a loan from his solo 401k for the amount of the car, went and paid cash for the car, and then has 5 years to pay his plan back. So he basically financed the car that he bought for his wife directly out of his solo 401k. So it takes a little bit of the headache of doing things out of it because you can just pay yourself back. And as long as you pay yourself a quote-unquote reasonable rate of interest, which is usually prime plus 1, you have 5 years. And so that's a really great option for people that, especially self-employed, sometimes you need access to a little bit of capital, maybe to put a little bit of fuel in your business, go on a vacation that you want to lend yourself money for and then pay yourself back. Whatever it may be, it's just you become your own bank. And that's a great and powerful tool that the solo 401k has. And so the big takeaway is that by creating a solo 401k, investors can not only place their retirement funds in traditional assets, but they can take advantage of opportunities outside of traditional stocks, bonds, mutual funds, and real estate, private equity, crypto, whatever it may be. And then you can manage those investment opportunities with checkbook level control, which allow for easy access. So you can double down on an investment that's doing well, cash out, money goes right back into your account without going through a custodian or without paying any more fees. It's just in and out like a regular checking account. And it really kind of eases the anxiety about what things are going to cost, what it's going to look like, how fees eat into your investment returns, the amount of investments that you make because you're not being feed on a per asset basis or on a yearly fee per asset. So you can spread your bets across as many assets as you want or opportunities that come across your desk. So that's a A brief overview of the self-directed solo 401k and how it's different from other 401ks and other solo 401ks from bigger providers. At the end of the day, self-direction can mean varying levels of freedom, and we believe that you should be able to take as much control as allowed by the IRS in a retirement account so that you can do what you want, when you want, without having to pay extra or ask for permission to make a certain investment. And we really are against paperwork. So the less paperwork we can provide you, the happier we'll be. We'll save some trees while we're at it. And I'm excited because next week we're going to have Rick Dude, my co-founder and Rocket Dollar CTO, sitting down with us to discuss our product roadmap, what we've built, and what we're planning on building. So looking forward to that conversation with him. Thank you for listening to this episode of Rocket Your Dollar. If you enjoyed this episode, please subscribe and share the podcast with your friends. To learn more about self-directed investing or to get started with your own account, please visit us at rocketdollar.com. See you next week.